My read in the markets is this is just a correction in an ongoing bull market. And that's counter to the narrative, which is there's this 4-year cycle that was handed from Satoshi and it exists in perpetuity. I don't think that's the case. So I think on a number of factors, on the macro level, it's all driven by liquidity. And the work that we've done has said that liquidity explains 90% of the price action of Bitcoin. I think, honestly, if I'm right, because we know the SLR change comes in January, they've got to get through month-end funding or year-end funding for the banks, and the plumbing market is broken right now. They'll probably make an announcement about term repo again, a thing nobody understands, but it's basically pushing liquidity in to get through this month-end funding. That's going to help. And then really, all of this kicks in properly by January. And so if I'm going to be wrong, it's going to be if January and February don't turn out to be very strong months. And it should all set up to be strong.
현재 비트코인은 9만 달러까지 붕괴시킨 이후 8만 5천 달러 사이에서 가격대를 머무르고 있습니다. 현재 가격은 올해 초와 거의 같은 수준입니다. 그 사이 시장은 어떤 변화들이 있었을까요? 알트코인들은 지지 라인을 연속적으로 무너뜨리면서 투자자들은 현재 절망 단계에 들어오고 있습니다. 초기 투자자들은 물량을 던지고 있고 ETF 자금은 조용히 빠져나가고 있습니다. 시장은 한때 하늘을 찌를 듯했던 낙관에서 지금은 완전히 최악의 심리 상태로 급전했습니다. 사람들은 이제 하나같이 상승장이 끝난 거 아니냐는 모두 같은 질문을 던지고 있습니다. 많은 사람들에게 2025년은 드디어 제대로 가는 해가 될 거라고 믿어왔습니다. 하지만 현실은 달랐죠. 가격은 오르지 못하고 시간만 흘러가며 의심과 피로감이 서서히 쌓이는 느린 고문 같은 장세가 이어졌습니다. 트레이더들이 성경처럼 믿어왔던 4년 사이클은 이제 축복이 아니라 저주처럼 느껴지기 시작했습니다. 올해 신고가를 찍은 자산은 거의 없습니다. 비트코인, BNB, 그게 거의 전부입니다. 알트코인들은 말 그대로 피를 흘리며 무너지고 있고 크립토 대신 엔비디아를 들고 있었던 사람들은 지금 이 시장을 아주 편안하게 바라보고 있겠죠. 이 극단적인 대비 앞에서 모두가 같은 질문 앞에 서 있습니다. 지금이 진짜 하락장일까? 아니면 거대한 랠리 직전에 고통스러운 정체 구간일까? 여기서 완전히 다른 이야기를 하는 사람이 있습니다. 거시 관점을 다루는 투자자 라울팔입니다. 그의 관점은 지금 시장의 공포 서사와 정면으로 충돌합니다. 그는 말합니다. 이건 끝이 아니다. 오히려 그는 지금 이 구간을 이번 사이클 전체에서 가장 큰 움직임이 나오기 직전에 준비 과정으로 보고 있습니다. 만약 라울팔이 맞다면 지금 패닉에 빠져있는 사람들은 인생의 기회를 스스로 버리고 있는 셈입니다. 하지만 반대로 그가 틀렸다면 지금 우리가 느끼는 이 고통은 시작에 불과할 수도 있습니다. 이제부터 라울팔의 분석을 통해 왜 그가 이런 확신을 가지고 있는지 하나씩 짚어보겠습니다.
My read in the markets is this is just a correction in an ongoing bull market. And that's counter to the narrative, which is there's this 4-year cycle that was handed from Satoshi and it exists in perpetuity. I don't think that's the case. So I think on a number of factors, on the macro level, it's all driven by liquidity. And the work that we've done has said that liquidity explains 90% of the price action of Bitcoin. And global liquidity going into 2026, purposely orchestrated by the Trump administration, is all about printing of money in various guises, plus a big fiscal stimulus. So we've got that happening. We've got the Clarity Act coming through. Sentiment is super washed out. I mean, unbelievably, miserably, disgustingly washed out, which people now think the cycle must be over. We can't have nice things. But almost nothing went to new highs. Bitcoin did, BNB did. That was about it.
It came very, very close.
It came close and then close but no cigar.
Yeah.
But really, how can it be a bull market when nothing's gone to new highs? And my view on that, it's been driven by an extension of the debt cycle out by another year. So most of the debt refinancing, which drives liquidity, happens in 2026. So also, we've seen stuff like this happen before, these weird sell-offs. If you remember 2021, everyone was really bulled up in the beginning of the year and it went down 50% in the middle of the year, then went back up to new all-time highs. It's that kind of similar price action we're seeing now. Yeah, I mean, things like global M2 is one measure. A lot of that's driven by the dollar, so a weaker dollar helps as well. Generally speaking, it's listening to what the Fed and the Treasury are saying. And you see these 3-letter acronyms, something like the SLR, Supplementary Leverage Ratio. Means nothing to anybody. What it actually means is the US government is getting the banks to buy the debt. So it doesn't go on the central bank balance sheet. It goes to the banking system itself that creates leverage and creates liquidity. So we're seeing that change. It was announced last week, surprise announcement, and it's out January 1st and mandatory by April. So basically it's forcing all of the banks to absorb more treasuries because they've lowered the risk weighting. They're even talking about getting rid of risk weighting on treasuries entirely, which means you can put unlimited amount of bonds on banks' balance sheet. Stuff like that are the big things. We've got the big fiscal stimulus, the big beautiful bill. You know, you've got to think about the US economy as a service sector economy. You're stopping taxes on tips for half of that workforce. That's a big deal. You know, there's a lot of handouts coming from that, so there's a lot of stimulus to come. So just watch out for these marker stones. You'll probably see it expressed via the dollar anyway, as it starts to weaken, and that'll give you your signal, and price usually correlates really highly with it. I think, honestly, if I'm right, because we know the SLR change comes in January, they've got to get through month-end funding or year-end funding for the banks, and the plumbing market is broken right now. They'll probably make an announcement about term repo again, a thing nobody understands, but it's basically pushing liquidity in to get through this month-end funding. That's going to help. And then really, all of this kicks in properly by January. And so if I'm going to be wrong, it's going to be if January and February don't turn out to be very strong months. And it should all set up to be strong. My job is to build a framework with conviction and then be paranoid about it all day. And really, if I focus it down, is like I really want to see some strong price action, Jan, Feb, starting in December, and then moving through.
Okay, so this is the global liquidity.
And that will be the death of the 4-year narrative. The
yeah.
moment that happens, everyone's going to go, oh shit, we got this wrong.
Super cycle?
Yeah. And then it becomes super cycle, it's never going down again, which is always wrong as well. So why altcoin season hasn't really happened yet is because it's driven bizarrely by the business cycle, as all risk curves are. So small cap equities are the same as alts, which are just small cap crypto. They're all driven by the business cycle. So when the ISM survey crosses 50 to the upside, which should happen considering we've got fiscal stimulus and monetary stimulus coming next year, and Trump wants to win the midterms, so they're going to throw everything at a strong economy. Scott Bessent says it all day, every day, we're going to have a really strong economy. So that's what they're pumping. So we'll see the ISM survey come up. The moment that happens, people get more income, more earnings, and people push out the risk curve. And it happens in small cap equities, and it happens in alts. So that's the start of alt season. We saw the beginning of it as dominance started to break down. It's still washing around a bit, but the next phase will be the plummeting of Bitcoin dominance as the kind of smart contract world starts taking prevalence. So a lot of the time we keep saying retail's not in the market, right? We're seeing no new money in crypto really outside of the ETF flows. When retail come in and they have a choice and they say, well, how they think about it is, well, where could Bitcoin end the year, 2026? And if you say 200,000, they say it's up 100%. Where could an altcoin go? Oh, it could be 10x. That's the risk curve that people look at all times. Is Google going to double next year? Highly unlikely. Will it go up 50%? Maybe. I mean, it's a gigantically big company already, $3 trillion. So does it get to 4 trillion, 5 trillion? Possible. But if you look at it, the kind of risk-adjusted returns going forwards, if crypto goes up, it will go up more. And it always has done. So AI has got the capital because don't forget, it's had all the investment at infrastructure level as well. It's been the focus of global governments here in the UAE, everywhere. Everybody's looking at AI. But when it comes to where you're going to make your returns, it's pretty simple. If my thesis is right, by Jan, Feb, there's a lot of people who are under-allocated to crypto still, who see it starting to outperform, and they start to panic back in. And we've seen a lot of people in the crypto space move to, buying options on, NVIDIA. Okay, fine, it's made people a lot of money. But again, most people are mercenary for returns, and if returns look like they're going to compound in crypto, they'll come back quickly. Again, I think generally people, if you think of the nihilistic nature of the reality of what young people face today, they can't buy a house. They can't get married. They can't have kids. They can't afford anything because the debasement of currency has meant that they can't afford it because their wages haven't gone up. So their propensity to speculate is much higher than anybody else. So when it comes to it, they're still more likely to speculate in crypto in the end. But the hard part is, it's easy to wave your hand and say, altcoin season, because everybody assumes that all of the shitcoins that you own are going to go up in value, but they're not. It's actually a hard game. You know, where do you go in the actual risk curve? What thesis do you build? What do you buy? You know, do you look for things with cash flows? You know, is it something like Aave, or is it one of the emerging layer ones, or is it another application layer? It's not an easy game. Even though people think it's going to bail them out and they're going to make a fortune, the probability out of the 1 million coins out there to get the right ones is pretty low. No, I think we'll see something more persistent, but it will be difficult to choose what the right ones are. But I think we'll see it because the amount of attention on the crypto economy at large is much larger than it was, because the institutions are at play, it's covered in mainstream media now, it's kind of everywhere and pervasive. So I think the amount of capital that can flow in is much larger than it was in 2021, which was much larger than it was in 2017, which was much larger than 13. So really it's the size of the capital inflows are proportional to the size of the opportunities, and that offsets so much of the issuance going on and the unlocks, all of that gets dwarfed by the amount of capital that ends up coming into the space. And so, again, I think there's going to be a bifurcation of what's a quality project and what's not. But generally speaking, I don't see any reason why altcoin season won't work. But it depends what your definition of altcoin season. You know, is it going to be your meme coin that you held on from last year that's now worth 0? Probably not.
Smoking chicken fishes and going to the moon.
I don't think so. I never sold it. It's still there in my wallet of shame.
Sure.
So I don't invest in a lot of altcoins.
Okay.
So I adhere to my own don't fuck this up thesis, which is basically stick to the majors. And then I've gone a bit further out the risk curve in a newer layer one like SUI. And you know, there's a number of these that are out there that are not in the top 10 or not top 5, but high quality projects. So that's where I concentrate my capital. I don't do a lot of the alt stuff, but I built a whole asset management firm around this thesis, which we invest in crypto hedge funds. So we're a fund of funds, invest in crypto hedge funds. So we invest in 10 of the world's best managers and let them do the work on that, because it is really hard to choose what it is. And different people have different theses. Some follow momentum-based strategies, others develop kind of big theoretical frameworks of where they think the world is, others use kind of discounted cash flow models. So you have to approach it in a number of different ways to capture it. It's actually hard for individuals to do it, and most of the time I found that really it comes down to Metcalfe's law, which is network effects. What's getting network effects? You need to prove that the user base is growing, and they need to be active users, not kind of rented users, and the value transacted on that network needs to be growing as well. So you look for those two metrics first, and really price shows a lot of this, which is why so many people use technical analysis in this space. If you're going to buy something, have a benchmark asset in your head. So I would say the benchmark asset, kind of mid-tier, earlier stage, is, let's say, Solana. Your chart better be outperforming Solana, or you are destroying capital by not doing it. So you'd look at Solana ETH, Solana Bitcoin, see where it fits, but then anything you pick needs to outperform those three. If not, put them there. And people just don't do that simple thing, and it really helps.
Switch?
Well, I'm on the SUI Foundation, but it wasn't actually to do with that. It was because I just saw the chart basing versus Solana, and I saw the network growing. So if I look at the network metrics for SUI, it's one of the fastest of all major projects. In fact, maybe the fastest. So of the 3 fastest currently that we measure, it's NEAR, it's SUI, and it's Avalanche. And so when you see network metrics like that, you focus. If the chart then starts to confirm that, that's when you do it. So I'm looking at weekly charts, even monthly charts, looking for basing patterns, looking for a change in that structure, and that's what led me to say, okay, this is, I think, the bet. Now, I think it's the bet for the cycle, but I can also change that if I see the price structure changing or those metrics changing.
Strong opinions loosely held.
Yeah.
Okay.
But I don't trade much, so I'll do 2 asset allocations an entire cycle. I found that we've over-indexed on narratives in the last 2 years because we haven't had massive inflows. So it's really PvP all the time now, and what we've seen is these wild rotations, because it's the same capital sloshing around. And we saw it recently with Zcash. Zcash, I think long-term it's probably a great narrative. I think it's probably right. But what you saw is a market going nowhere and everyone gets bored, one narrative picks up and everyone throws their capital into it, it goes up and then suddenly the market narrative changes and it goes down again. And we've seen that repeatedly. We saw it with meme coins, we've seen it with DeFi, we've seen it with all the things, and nothing's got long-term traction so far because no new capital's come into the space. So I do think the AI narrative will come back, but in a different form. I think that narrative will be persistent and important. I think we will see, just generally the stablecoin narrative is going to hold for a period of time because it's transacting huge volumes on some of these chains. So Ethereum obviously is the big daddy behind this, but we're seeing lots of chains getting lots of volume, and that's really interesting. So I think that's important. And then I also look where nobody else is looking. I always like to be contrarian, so I've spent the entire cycle when my crypto portfolio is up near the highs, I scrape money off and buy high-end digital art. So I spend a lot of my time buying NFTs. So the hardest thing that will probably happen in 2026 is altcoin season. And you'll see endless posts on X that I've made a 20x in a month, and you'll be chasing everybody else's returns. Most of those people don't make it. Through my entire career, and I've been in the investing industry for 35 years, almost nobody can make a job as a short-term trader. Almost nobody. And so you've got to realize that. So therefore, don't get caught up in the FOMO narrative. That's the killer. It kills retail investors every time. But if they just held Bitcoin or ETH or Solana, whatever, or a basket of them, and did nothing, they would outperform 99.9% of shorter-term traders. So the don't fuck this up really is hold high-quality assets, don't FOMO into stuff. If you want to have a degen bag, keep it to 5 or 10% of your holdings so you can have fun in the market and feel like you're active, because you're actually not doing anything with your main holdings. Don't use leverage. October showed us yet again that leverage looks so delightful and so alluring, and leverage on a 80-volt asset is a ticket to bankruptcy.